Hello everybody, my name is Troy. I'm a Senior Account Manager with AvaTrade. I'll be leading this session this afternoon. Welcome. Now before we get going, let's do a quick systems check. Just type OK if you're hearing me clearly and seeing my screen all right. All right, great. Looks like we've got enough responses here. Looks like we're up and running fine. Hello everybody. All right, so as we get going, keep in mind, as always, no trades are guaranteed to profit. All investments have their level of risk. The same is true with Forex trading, spread betting, CFDs, options trading, etc. What we cover is meant to be educational in nature within the session today. It shouldn't be taken as financial advisement. If you want to see our full risk disclosure statement, it is found on our main website there. One thing to keep in mind when we're talking about risk, and you can manage risk in different ways that are right for you in terms of the amount of exposure per position and using stop loss marks or maybe hedge positions, things like that. And these are concepts that we cover through the sessions as well. There's also a unique feature that's available that helps to manage risk for those using the AvaGo mobile app. And if you haven't gotten the AvaGo mobile app on your mobile devices yet, I would encourage you to do so. I'll show you in a moment where you can find it. And there's a feature on the AvaGo mobile app called AvaProtect that allows you to have protection against losses for defined time periods, 1 hour, 6 hours, 1 day, 3 days, etc., on FX pairings, gold, silver, and maybe more assets eventually. And in that way, you have no risk for those time periods. Any losses would be added back when the coverage ends if you choose the protection on your trade. So it's something that's unique to AvaTrade and specifically to the AvaGo app. You might check that out as an option for helping to manage your risk. It's an extra tool that can help you out potentially. Now, fundamental analysis, that's our focus today. There's a general theme today that has carried out and that's also carried out on the charts, technically speaking, to make for some easy moves. If you were paying attention to the fundamentals a bit, which is the point of what we're going to look at now, to see how easy things would have been up to this point by following the fundamentals, and also maybe to look at some potential moves moving forward through the rest of the day or even into next week. So keep that in mind. And in terms of fundamental news or fundamental analysis, we always talk about there being two main types. One is the type that are regularly scheduled, economic announcements like production numbers, jobs numbers, PMI numbers, etc., that you can look on an economic schedule, know exactly what it will be about, what currency it's expected to affect, etc. And so those are more predictable in terms of timing and scope. The other type of fundamental news would be what we call extraordinary economic events. This type of extraordinary news, you just don't know when or what it will be, right? You might have a general idea, hey, we're probably going to hear something about coronavirus soon, whether it's good news or bad news, more outbreaks or better medicine. And so you can prepare even with pending orders for that type of fundamental news, just in case breaking news comes that's really good or really bad. You find price levels on the chart that, you have pending orders waiting. If that price level gets broke, then hey, it must have been a good headline or it must have been a bad news headline, etc. So you can prepare for the unknown type of economic news, the extraordinary type of fundamental news, and you can also react to what's already known. Okay, and we'll look. There were some good numbers that came for the pound today. Some good economic numbers that came out. There were some numbers that didn't look so good for the euro. Okay, but now there's been some talk with some meetings in the European Union about more stimulus, and so that economic news might be positive. And so let's take a look without wasting any more time. Let's look at some of the news that actually came out. And so, and as we go along, please ask questions. Yeah, GBP is dropping, makes sense. It went up quite a bit already against some other assets, so a pullback makes sense. I can understand that happening. And if you look at it against the euro, boy, that's an interesting chart to look at as well, which we could take a peek at. Now, What we're looking at here is AvaTrade's website. I promised I would show you where you can find the AvaGo mobile app. So you go to trading platforms. If you were using your phone or your mobile device, point at this link, click on AvaTrade Go. You can download the AvaTrade Go mobile app, and you'll see a feature called Ava Protect. If it's offered for the asset, FX pairings, gold, silver, you'll see it as an option to choose. It shows you the premium cost. It's a cost that's taken right when you open the trade. And then any losses are covered during the time period that you chose. And if it goes the correct way and you profit, all the profits are yours, minus any normal charges for overnight interest or whatever, depending how long the coverage was and how long you held the trade. But the profits, as normally would be, are yours even with the coverage. Okay, you just have the premium cost and then you're covered no matter what the losses would be. So during the covered period, I should say, no matter what the losses would be. During times of high volatility, like now through a global pandemic, maybe it's not a bad idea to check out that option. I have a number of traders I know that are using it, and it's been useful for them to go after some big moves. And if it goes the right way, great, you made a huge profit. If it goes the wrong way, hey, you only paid the premium cost. So it's something to consider within your general risk management plan. Now, if we look at some headlines today, futures climb on optimism over swift recovery. Okay, futures have been green pretty much all day. We saw that. U.S. market's going to open in, an hour and a half. We have some U.S. announcements coming soon as well, during the webinar even. And so that could swing the momentum, these announcements coming. But overall, the sentiment's been in the green all day, positive. And we see the volatility is down, okay? Volatility index down over 5.5% right now. That means fear is down. It's confirmatory here. We see futures are green and confirmatory that the fear factor here, the volatility index, is down. Usually those are in alignment. Sometimes they're not, and then we can take advantage of that potentially as well. In this case, they're confirmatory. Volatility down, futures in the green. It makes sense. Lancelot, you're welcome to attend, whatever region you're from. We might look at some assets like cryptocurrencies that are not offered through our Canadian regulation. So not everything will apply, but the education that we're going through, you're more than welcome to attend and listen. So certainly, we cover assets like oil, stocks, indices, FX pairings, things that certainly are available for you. And we don't spend much time on the cryptos typically anyways. Not that they aren't interesting assets, but we tend to lately been focusing on the equities. All right, so we see that in the headline. Futures are up, optimism over swift recovery, okay? There's been a lot of talk about this V-shaped recovery, meaning the drop was really fast and then the recovery being really fast back up. And so far that's come to fruition. It doesn't mean it will continue. It could change. I know some have been advocates that it would be a fast recovery, and others have said, nah, it's going to be a bumpy ride, and it'll have a double bottom and this sort of thing. So there's always conflicting opinions. But yeah, all of these sessions are recorded. So Mayowa, I'm sorry if I'm mispronouncing your name. It looks like Mayowa. They're all recorded. You can find the recordings on our YouTube channel. Good question. So what we're looking at here is positive momentum, partially fueled by swift recovery hopes. Okay. Then we look at another area today, and we say, okay, Great Britain pound had some positive numbers. Okay, core retail sales better than expected. Retail sales better. Public sector borrowing a little higher than expected. Retail sales here, not great, right? -13, but better than expected. See, we've got two different things: core retail sales and retail sales. Okay, the core retail sales factors out specific items that can skew the numbers, and retail sales includes everything. But they were all green, all these retail sales numbers. And out of the European Union, there were some negative numbers, and that kind of maybe shined through in some of the pairings today. But last I looked, the euro looked like it was trying to have a bit of a recovery as there were some talks that went on today, and we can see here on the announcement board that those talks began earlier today. Okay, 6 a.m. New York time, EU Leaders Summit. Okay, and I saw headlines about stimulus and some positive sentiment type things that have been coming out of those out of that summit so far. So and then we see announcements that are upcoming in 19 minutes. Current account numbers in out of the U.S., Canadian numbers, core retail sales, and even more numbers out of the U.S. here. FOMC member speaking, oil rig count numbers. So a lot of stuff that could move the markets, okay? Especially when the FOMC committee and Fed Powell speaks, okay? Powell's the head of the FOMC committee, helps make the major monetary decisions in the US about interest rates, stimulus, all kinds of stuff. So this is something that really, I would say, will move the market. Which direction it'll move depends on what he has to say, right? So pending orders being prepared for huge movements, maybe breakthroughs with a breakout strategy with buy stops and sell stops could pay well, okay? Because there should be a huge stimulus around this time later today for some large potential movements. Now, some other headlines. Copper heads for fifth weekly gain on economic recovery hopes. Again, it's the same theme. This is on Reuters now. Multiple major news outlets reporting similar headlines. This one's specific to copper, right? Copper heads for fifth weekly gain on economic recovery hopes. Why specifically is copper predictable that the price will go up if there are economic recovery hopes? Gold's a safe haven. It's been tricky lately, and typically gold would go down with good news. It's been going up with good news with the pandemic, but usually, the precious metals maybe drop down during times of optimism. Why would copper specifically consistently go up during times of optimism? When we see that the volatility index is down 5-6%, why might you expect copper to rise? Why might that have been something to look at? Yeah, more bullheads, Kirsty, on that economic schedule means more likely to make movement, to cause more volatility. 3 bullheads was the highest on that platform. Yeah, copper is used in industry, to go back to my question. Copper is used in wiring, and the demand for it goes up when the economies are doing well. And so it makes sense many times under normal circumstances when there's good economic news, you might see gold push down and copper go up. Okay, so it's an interesting relationship between some of these metals and the economy, and specifically the headline is talking about copper being very bullish through the weeks because of this positive economic sentiment. How about oil? Oil in New York tops 40 with demand recovery accelerating. So they're noticing more demand for physical oil, not just futures contracts playing with prices, but physical demand for oil has gone up. Maybe some of these floating tankers off the coastlines can finally unload their oil and get rid of it. Okay, so certainly higher demand is one reason for oil prices to go up, and we see they went up today. Okay, and there's been positive sentiment with oil for weeks now. All right, even with a global pandemic, as there's hope that we're coming out of the pandemic, that's a sentimental reason for oil to go up. And then when there's actual larger physical demand, which is what we're talking about with this headline, now you have 2 reasons for oil prices to have gone up, which they have. They've gone up. Now there's a resistance level near 40. We can take a look at the chart. I'll show you. It's the top of a very large gap around 40, 41. So there's some playing around you can do with pending orders in that location as well. All right. We talked already about this. The EU summit is underway. The euro's been steady, okay, and actually looked like it was trying to recover a bit. and do some climbing prior to the session starting today. Our session, I mean. And the dollar, well, it's been strong pretty consistently, but you know, as the world starts to feel more safe about things, you know, maybe they're more comfortable investing in other things other than the US dollar. The dollar index has been strong against other currencies through the pandemic. Maybe the dollar being viewed as safer than many other currencies. You know, typically the yen is a safe haven, right? But the dollar itself, the US dollar, has become somewhat viewed as a safe haven through this crisis. So, you know, as positive momentum really starts roaring, maybe there's reason for US dollar to go the other way against some of these currencies. Okay, and we can specifically look at the Euro-USD and how much it's dropped against the USD in the past days, and the potential climb that could be there if it goes back to where it was just a week or so back. So we'll take a look at that. With that said, let's go ahead to my demo account and we'll take a look at what's happening. Now here's crude oil. I alluded to the fact that oil has been bullish. That uptrend is like a perfect alleyway to have been trading on. Technical traders love seeing this, and I can show you, you know, we're doing a fundamental session, right? So if you were following the fundamentals, you already would have probably been buying on oil. And now we look at the technicals, and you know, each time this has created a resistance level, right? Here's a level of resistance. Okay, resistance, resistance, resistance. Once it's broken through, you've got your uptrend. And then once it formed a new resistance level, resistance, 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 resistance. Once it broke through, again, became support and uptrend. As soon as it formed a new resistance level, resistance, 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 breakthrough, you get another uptrend. Okay, now the question is, how long will that continue? You know, if you're late to the train, so to speak, if you say, okay, I wish I would have been riding that up, and maybe using buy stop pending orders. Where would your buy stop pending order start? Well, if you find a resistance level, you would have programmed when the movement was still down here to buy once it broke the resistance, maybe at a price like right there. Okay, and the next spot where your pending buy stop would have been once you saw the resistance is to buy if it broke through that resistance here. And the next stop then obviously was here. Resistance level, once it broke through, your buy stop pending order buys, and there you are. Now we found new resistance, right? There's the resistance level now. Resistance, resistance, and now if we look at the bigger picture, why maybe is there resistance at that price? And if we look at the bigger picture, 4-hour candles, we see, okay, that is a resistance level. Look, right around this area, just back on the 4th, right? Couple weeks back, it reached this price approximately and dropped. So now it makes sense. As it got close, that's where you take profit. It's darn near that high point. So if it's going to break this high point, what kind of pending order could you put above this resistance level right here? Okay. What kind of pending order could you put above this price level that if it breaks above, it now broke the next resistance level and you could get in as a buy up here? That would be a buy stop. Okay. And is it guaranteed to win? No, of course it's not guaranteed to win. But look at the historical movement on these 15-minute candles, right? Look how many times you would have won. It's okay if you lose on occasion too. You need to be consistent though with your strategy maybe, and perhaps you come out winning 3 out of 5 or 4 out of 7, which is enough to profit. Okay. And so as we looked at the fundamental news the past weeks, as this big rise was occurring, it was quite predictable oil might push up. There was a lot of positive sentiment about major economies coming out of quarantine, opening up, demand maybe for oil coming back because of that. And so once you understand the fundamentals of what's driving the bigger picture, then you can start to choose your technical entry points and your technical strategy. In this case, a breakout strategy above each resistance level on the small candles, on the 5-minute, 15-minute candles, waiting for resistance, buy stops above, waiting for breakthroughs with momentum, meaning confirmatory movement of a continued uptrend, and boom, your buy stop buys for you. All right, so this is a strategy that would have paid well with oil over the past weeks. Okay, now the question is, where's the resistance level if it breaks through here? Okay, you see we're at the top of the gap. Let me get rid of these lines because it really clouds it. As we get to the 1-day candles, you see how many lines I've drawn on 15-minute candles. They look so close together when you get to the one candle view, one day candle view, that it clouds your view. So let's go to the objects list. I'll delete all these lines. Let's get rid of them all. And now we can see the gap that I'm talking about. Okay, this was the gap when the crisis first started with oil. Boy, did it gap down, and then ran down to zero on some of the futures contracts, right? Or even below zero. The cost of storing it became higher than the value of selling it. And so on some futures contracts, the price actually went negative below zero. Now, if we're looking here, we see the gap, and then we see once it re-entered this gap, okay, it filled the entire gap. It filled all the way to the top of this gap, which is here, okay? A technical strategy is once a movement enters a gap, a lot of times it will run through the gap until it reaches the next resistance level, which is what it did here. And if you look back at the past weeks of webinars, we talked about it. It was there. We said, get your buy stops ready. You have a large potential movement if it enters the gap. And here it went. And then we also talked about if it gets to the top of the gap, that's resistance, trade down. And you might potentially catch a refill of the gap back down. Well, look what happened. It hit the resistance at the top and back down. Then we said, listen, if it hits the bottom of the gap, buy. Have a buy limit waiting down here, because once it hits the bottom of the gap, that's a major resistance level. It might bounce back up. And look what it did. It just bounced all the way back up almost. So just trading this gap, you could have profited already 1, 2, 3 times, and those are $5 movement in the price of oil each time it went through the distance of the gap. $5 per barrel. Imagine trading, I don't know, a 1-lot position, $5,000, $5,000, $5,000. This filling and refilling of the gap 2-3 times could have been a huge profit, right? Obviously, you want to take trade sizes that are right for your balance and for your risk management strategy, your tolerance for exposure per position, etc. But look how well this worked. And we talked about it in advance is the thing for weeks. I showed everybody, look at this gap, look what could happen. Okay, now the question is, what do we do now? If you didn't trade on it, what's your next opportunity? Or even if you did trade on it, congratulations, what's your next opportunity? Okay, so, you know, we drew a line and we said if it breaks that resistance, you could have another big run up, right? This is the major resistance right here. If it breaks far enough above this gap entry, right? Let's say here, if it breaks out of the gap and into this candle here, then the next level of resistance is where? Right about here, right? That's the next resistance level, which is what, 43.6? These are 1-day candles, okay? That's the next resistance level on the 1-day candle. So you could start to put pending orders above this resistance here, that if it breaks through the resistance at some point, you might be convinced that, wow, that's a strong uptrend if it broke that resistance, right? That's the idea of a buy stop pending order. They don't always win, right? But you don't need to always win, is what we're obviously pointing out many times in the webinar. You don't need to always win to profit. You need to win 1, 2, 3, If it breaks through and hits your buy and then goes down and you lose, okay, it happens. Eventually it'll break through and climb, right? That's the idea. And if you're in on it, the profits could be much more than the losses. Look at the distance for if it breaks through and you buy from here. Look at the distance to this resistance level compared to the distance of what you'd have to risk to get back below the resistance, right? It's like 3 times or 4 times more potential profit from here to the entry point here, from the entry point to the next resistance, 3 or 4 times more potential profit compared to your risk if you put your stop loss back down at this level. Okay, so pending buy stop might make sense somewhere above this resistance level. All right. Mohammed, you can find the AvaTrade platform for your PC on our website. Let me take you there quickly. So here, trading platforms, MetaTrader 4, MetaTrader 5 for the PC. Okay, will not work on a Mac. It's a Windows-based program, MetaTrader. So MetaTrader 4, MetaTrader 5, just click on it and click download. You don't need to click register now. You already have an account. So you just click download and you download the platform. Very simple. Okay, so besides putting a pending order buy stop up here in case it breaks the resistance, what obviously else could you do? Here's that resistance level that I just drew on the 1-day candles. It's right here. Okay, look how close the last drop was to the top of that gap. This is the top of the gap. We drew the line on the 1-day candles. The gap's way back in time, back this way. Here's the resistance. This was predictable. It dropped from it. What could you do? You could sell off of this resistance with a take profit somewhere down this direction for a potential profit if it starts to fill the gap again. And if you're wrong, your stop loss is up here somewhere, and you have a buy stop waiting maybe to go the opposite direction if it breaks the resistance, a buy stop somewhere up here above the resistance. So you could do a 1-2 move now, a market sell and a buy stop above. Or you might say, well, I might sell, but I want it to get closer to the resistance. Okay, fine. So if you wanted to sell from, let's say, up here, then you put a pending order, which would be a sell limit. Sell limit, you program it to sell from a higher price than it is now. So if you want to wait until it would touch closer to this resistance line up here before you'd sell, you can do that. Now understand, right now, if you sell, you're going against the fundamental news. The fundamental news, all those headlines were positive just now. That was all positive sentiment, and the volatility is down, and oil is still uptrending. Even though it's near that resistance, it's still uptrending. So every trader is different. A purely technical trader might just wait to see that there's a double top like we see here, double top, there's a wick, and say, okay, I'll sell. Okay, but you can have your stop loss just up here. So you might risk, what, 50 cents or 60 cents per barrel for a potential profit of $3 or $5 per barrel if it fills the gap again? Think about it. How often do you have to be right with that kind of entry point? If it does what it did last time, which was refill the entire gap, if it does that again, you make about 10 times what you have to risk to your stop loss up here. You only need to be right once out of 10, something like that, if you're making $5 per barrel and risking 50 cents. So that makes the risk management maybe worth it to you to say, okay, I'll take a shot that it'll fill the gap again, put my stop loss just above the top of the gap, and if it breaks through, then I'll have a buy stop and I'll trade the other way. That way you have no emotional connection to the direction you're trading. You're rather than trying to guess the market, you're just trying to be smart. And many times that's enough. Now the fundamentals come in with the fact that maybe you prefer one over the other. Maybe right now you say, I don't think it'll fill the gap. There's too much positive momentum. And so you don't do the market sell and you only put a buy stop above the resistance. And if it breaks through, you're in on the buy. If it doesn't break through, okay, fine. But you didn't, in that example, then go against the fundamental news. Okay, type okay if you're with me on that. If anyone needs me to show how to do pending orders, I can show real quick. All right, let's look at some other assets. How about S&P 500? Okay, we're on 4-hour candles. Let's go to 1 hour. Let's go to 30-minute. Look what's been happening today. Up. All right, see, I'll give an example of a pending order here, how to set it up. So today, market's been climbing. These are 30-minute candles. Up, 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 up. It was in the headlines this morning. Positive news. It was in the volatility index reading. It was down. Volatility was down. Fear was down all day. Okay, it was easy to read. It was in the tea leaves, so to speak. Volatility was down. Fear was down. The futures were green. Headlines were positive. If you went with the fundamental news, you'd have been buying all day on the major indices, and they've been climbing all day, even without a technical analysis strategy. Just the fundamental news told you buy today, and there it went, up, 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 up. And we can say, okay, what if I wanted to do a pending order, since we have a request on how to do it? If you saw this resistance level here, resistance, resistance, and you said, okay, if it breaks above that resistance, I'll buy. I'll buy from here. I'll buy from up here if it breaks the resistance. And then today it broke through the resistance, this resistance level here, resistance, resistance, it broke above it here. Your buy stop pending order would have gotten you in, and you'd have rode the momentum up. So how do we do that buy stop? You open the order window, you switch from market execution to pending order, and you choose the type of pending order that means buying from a higher point. In this example, if you were programming it to buy if it broke up above the resistance, then that's a buy stop. You put the at price here, buy from such and such price. You could put your stop loss back below the resistance, and you take profit somewhere up here. Okay, and then you click place, and then the pending order will show down here. And the pending order is not an opened trade, though. It only opens if it hits your at price. Okay, see, is that, you understand how to do that? Okay, perfect. And by the way, the mobile app, the AvaGo mobile app, Keegan, good question. What's the difference between a buy stop and a buy limit, or a sell stop and a sell limit? First of all, let me tell you, the mobile app makes it so you don't have to know the difference between a buy stop and a buy limit, and a sell stop and a sell limit. On the mobile app, the AvaGo mobile app I'm talking about, the one that AvaTrade made, the AvaGo mobile app, when you put your pending order in, it just says, what price do you want to buy from? Or what price do you want to sell from? It doesn't matter if you put a price higher than now or lower than now, it'll make it the correct type of pending order. You never have to see or choose buy limit, buy stop, sell stop, etc. On the mobile app, you just say, hey, I want to buy if the price reaches here, or I want to sell if the price reaches here. And it will make it the right type of pending order automatically. The mobile app will. Okay, so it simplifies it with the AvaGo mobile app. On this platform, on the MT4 platform, when you're doing a pending order, you have to know which one is which. If you're programming it to buy from a higher point, you have to put buy stop. If you're programming it to buy from a lower point, you have to put buy limit. And the same thing for sell stop and sell limit. Sell stop is selling from a lower price. You program it to enter at a lower price than it is now. And sell limit, you're programming it to enter from a higher price. Okay, so that can be confusing. So the mobile app really makes that easier if you don't remember which one is which. Okay, and why would you want to buy from a higher price? We gave an example. You're saying, I'll buy if it gets here, and the movement was down here, because you're waiting to see if it'll break the resistance. Boom, it broke through, it buys. That's a buy stop. A buy limit would be if you drew a line down here and you said, okay, whoops, I drew a line that is the wrong direction. If you drew a line down here and you said, okay, if it drops to this support level, then I want to buy. That's a buy limit, programming it to buy from a lower point. Okay, good. All right, so let's look at some other charts. How about the FTSE? Also up, right? We've talked for weeks now about the sentiment is global right now. It's not related to just one country. It's a global sentiment of either fear or positive sentiment where the fear is down. And it's largely related to the view of whether the world is coming out of this pandemic or not. Okay? And today, the headlines were there from all morning, all afternoon long, that sentiment was positive, fear was down, headlines were positive, that people feel like there's a recovery coming. And so this upward movement has been global on the equities, on the indices, on most indices, on most assets that are stocks or indice related. Raminder, I'm reading your question is why I got quiet. You're saying if you trade using pending orders like buy, stop, or sell limit close together, you're saying then a stop loss is not required as the pending orders are active. Is this correct? Pending orders, you need to risk manage in case they open, right? You have to have some risk management plan, unless your risk management plan is not to have one. That's up to each trader. But the pending orders are not opened. Once the price hits for the at price that you programmed for it to open at, then you probably want some type of risk management on there. Okay. Now, if let's say I have a buy stop pending order for one lot above a certain price and a sell stop pending order below a certain price, and they are of the same trade size, one lot on gold above X price, one for a buy, one lot on sell on gold below Y price for the same size as the buy. Well, if it goes up and triggers my buy stop, great. I don't need a stop loss, because if it comes then down the wrong way, wherever I have my sell stop program to open, once that opens, I'm breaking even at that point and I'm fully hedged, because now I have a one lot buy and a one lot sell. Okay, if that's what you're talking about. If you have two pending orders close together in opposite directions, then they can serve as a form of risk management. Whichever one opens first, if it runs the right way, great, you profit. If it then reverses and comes back, well, then the other one opens and covers you in the other direction. And maybe you have a stop loss on one and not the other. In case then it reverses again, it'll close the second one that was opened, and the first one then can keep running and never had to have a stop loss in that example. But then once the hedge trade closes, you better risk manage the one that's open in another way if the hedge then closes eventually. Okay, those are some different concepts. If I've confused you, let me know. But I think maybe that's what you were asking about, having two pending orders close together, and then maybe you don't need to put a stop loss. If one hedges the other, then that could be a strategy that could make sense. It is a hedging strategy that I've seen many people use very well. Okay, so it's something you could try out. Now, and it works best if there's a range. If let's say gold was ranging between, I don't know, 1720 and 1725, up and down between that range. Now you say, okay, I only have to risk $5 to get outside of this on either side. And if that's an acceptable distance to risk, then there you go. Buy stop above it, sell stop below it. If one opens, you're only risking that distance to the other. Yeah, let's look at Euro-USD. Good suggestion. It's been interesting today. So let's take a look. Look at that. Look at the recovery the euro has made. And, you know, we talked about this in the open of the webinar, that I saw it looked like it might be reversing because there was some momentum building with that summit, the EU summit that was occurring. And so I noticed as I was preparing for the webinar that, you know, there was a double bottom that formed down here, one wick and two wicks. You see 1, 2, and I noticed that back further, this was a support area. And so it looked like maybe there was a recovery coming up. And with all the positive momentum, it could be that the USD is weakening a bit at the same time, because people were running to the USD with fear. And now if there's so much positive sentiment, maybe they feel safe to buy back into something like the euro, especially with the EU summit talking about large amounts of stimulus for the European Union. And so While stimulus in general means they're maybe going to print more euros, which would weaken a currency, in today's environment, just feeling like there's something to support the economy has been causing currencies to strengthen, even if that support is from printing more euros in this case, okay? Maybe they have euros on reserve. Maybe they don't need to print them. The stimulus maybe is already printed money, so it shouldn't weaken the currency maybe. So in any event, we see a strong bounce. Now there is a resistance level up here. So if you were in on this, off this support level down here, if you're scalping, this might be the first spot you take profit. You see it's hesitating, or right as it gets near there, it's hesitating. So I think it'll test it and maybe test it again, maybe break through and come back. It'll bounce around and then it'll decide if it wants to reverse back down or keep climbing, right? The short-term trader might already be taking profit on this right now, okay? Then the longer-term trader would say, well, why are you looking at 30-minute candles? Let's look at 4-hour. And a long-term trader might say, here's my resistance level. Resistance, 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 head and shoulder formation, right? Shoulder, shoulder, head. A long-term trader might say, I'll take my profit when it gets up here, okay? Or longer term, maybe a medium-term trader looking at 4-hour candles. That's quite a potential profit with a very small risk to get below this support if you got in down here, okay? What kind of pending order could we put here if it breaks this resistance on the 4-hour candles? If it breaks this current resistance, you could get in with a buy stop if it has enough momentum to break through that resistance. Okay, so that's a potential opportunity still, even if you didn't get this run up. If it breaks this resistance, you could see another run towards the next resistance level, which is here. Okay, here's resistance here, and it dropped. So if it breaks through here, it could have a strong run to the next resistance level potentially. All right, so very interesting chart to look at. A lot going on fundamentally today with the EU summit to say, listen, I understand why it took such a big run up just now and why that potential was there. You also at the same time could do a market sell off this resistance, couldn't you? You could say, listen, I'll sell, market sell off this resistance. If it breaks through, I've got my buy stop up here ready to go. And we see it's hesitating at the resistance. There's the wick. I don't think it's done challenging the resistance yet, but if you think it'll pull back down off that resistance further, it's a spot, technically speaking, that's a nice entry point. Okay, let's look maybe at the Euro GBP. Look at that. Look at the Euro pound. It already broke through, didn't it? Resistance, resistance, resistance right here. It met the resistance and up it went. Okay, wow, would a buy stop pending order have paid well up here? Okay, what's the bigger picture? 1-day candles. Look how high the euro was just back in March. Okay, as the pandemic got going, woo, boy, did the euro give up ground to the pound. Now, look at the recovery. So now when I said a long-term trader, then I corrected myself and said a medium-term trader might wait until that next resistance level rather than taking profit at the first one. The long-term trader might be looking here and looking at potential, right? So it's all up to preference, your style of trading. How patient are you? How long do you want to wait? But there's certainly a high ceiling here if we go back just a few months on the Euro GBP. Okay, so very interesting asset to look at, Euro GBP along with the Euro-USD. The Euro pairings in general, I think, have a lot of potential movement, both in the short term and the long term. We see it, look at it pulsing up, trying to break this wick, this resistance level right here, the top of this wick. It's right on it right now. Okay, very nice setup for a buy stop up here. Just like on the Euro-USD, the Euro-GBP could have a buy stop above this wick, this resistance level right here. And 5-minute candles show if you wanted to sell off the resistance. You see it hit the resistance perfectly and paused. If you want to sell off the resistance, your stop loss would just be up here above the resistance level. You don't have to risk much, and if it pulls back, great. And then your buy stop would be somewhere up here just above this resistance. Again, if we go back to 1 day, I can draw a line at the top of this wick right here. There's the resistance level. Top of the wick. We go back to 5-minute candles. There's the line. That's from the 1-day candles, this line. It hit that resistance, tested it, and now it's trying to drop. Okay? So market sell, stop loss above the resistance, buy stop above the resistance at a spot where you're convinced it must have reversed and gone up through it. Okay? So you got potential drop and you got a potential breakthrough. All right? GBP JPY. Okay, that's the last request. Let's look at GBP JPY, and then we'll call it quits. And by the way, everybody, please be careful carrying trades through the weekend. Just keep in mind that with the amount of volatility we've had with US-China negotiations, with the pandemic, with everything that's happening around the world, the amount of gapping that can occur on oil and gold and major indices from Friday's close to Monday's open, those gaps can be big. And if they work against you, could gap past your stop losses. Okay? Now, obviously, they could work for you, give you a nice profit, but it's a risk sometimes if you're a short-term trader. If your trade sizes are large compared to your balance and you're trying to scalp large profits off small movements, if you carry trades through the weekend, it could hurt an account pretty bad. Now, if you're a long-term trader and your trades are a small exposure percentage and you've got a long distance to your stop loss and all of that, then carrying through the weekend maybe is not as big of a risk, right? So it depends on the situation, but evaluate. Make sure you're careful about carrying trades through weekends. Here's GBP JPY. This was the request. Look at the 5-minute candle resistance point right there. Okay, this was support. Here's your breakthrough candle. It broke the support. That's a classic breakthrough candle. Larger than the other candles, showing large momentum in order to get below this support level. Okay, now it's challenging. And look, it's about to break it. GBP JPY trying to break this old support level. I would say if the price gets above the edge of these wicks, you see these wicks here coming down, if it breaks above this breakthrough candle on the way down, this was the breakthrough candle. If it breaks through back above, then this establishes an uptrend if it gets up here, right? It's an uptrend if it gets up here. So you could have a buy stop pending order ready to go up here, and then your stop loss would be back down below this support level. Here's the support level here. So entry point up here, stop loss back below the support. Okay, look at it break. Right now it's trying to break the resistance. It's testing it, It didn't break through yet. You don't see this candle, right? This size candle yet. If you see this happen, but on the way up, you see it go and break right through all of this, your buy stop could be up here. Okay, and then that established large momentum if that happens, and there you go. Now, if you think the pound is going to pull back down and not break this resistance, you could do a market sell right now, right? You could do a market sell with your stop loss up here. I don't like going against the strong momentum. The momentum right now is for the yen to weaken. It's weakening against almost everything because fear is down. The yen is a safe haven. When fear is down, the yen tends to weaken. So why would I bank on a reversal here when all of the fundamental news says the yen should stay weak? If the yen is weak, it'll have a hard time pulling the pound back down. So I might prefer to have my buy stop up here and my stop loss down here and avoid trying to sell on this, right? That's based off the fundamental news. Listen, anytime Brexit news breaks, that's the type of fundamental news we've been talking about, which is the unexpected news that you don't know exactly what it'll be or when it will break. So Brexit news could be positive and cause the pound to go up. It could be negative and cause it to go down. So in that regard, you just prepare for breakthroughs. A buy stop up here, it's ready for good news about Brexit, isn't it? You're waiting on it. So, and also just technically speaking and going with today's fundamental news, you might have a buy stop up here just waiting in case it breaks through. And by the way, what else was positive today on the pound? Let's go back and look. If you remember, we looked here on the economic calendar. Look at these announcements out of Great Britain. Core retail sales better than expected, right? And retail sales better than expected. So core retail sales and retail sales better than expected. You see positive headlines, meaning the yen should weaken also. So there are headlines for why the yen should be weak, why the pound should strengthen. And then we go to the chart and we say, oh, well, that's no surprise. For the past however many hours, the pound has been climbing against the yen. Simple, right? In hindsight, it's very, very simple. Okay, good. And we see it's testing the resistance. You see, the resistance is here. We created kind of a strike zone. The bottom of the resistance is the low point. The top of the resistance is above these wicks, right? And that's why we said, well, you wouldn't do a buy stop yet. Just because it got here above this low point, you would be patient and see if it breaks through all of this resistance and gets up here before you commit to buying. That way you avoid false signals. Now, this is reversing off the resistance, but likely we'll test it again and again before it decides the bigger movement. And we could look at 1 hour candles. What do we see? We see the same resistance level. We also see that this has been a huge downtrend this week. All week long, the pound's been dropping against the yen. So if this is truly a reversal, if this is a reversal and the pound is ready to strengthen against the yen, look how much room it has to climb. Look how much it dropped this week. The 1 hour candles give us a bigger perspective of potential. Certainly does. And so 4 hour candles gives us another perspective. Look at the support level here. Okay, this was resistance and then support, and look where it bounced up from. It was predictable that bounce was going to come from this support level here. Okay, so as you analyze the short candles, 5 minute, 15 minute, when you look at the 1 hour and the 4 hour, you start to see reasons why at a certain spot that's where the pound decided to climb today. It was right off that support level when we look at the 4 hour candles in the direction of the fundamental news. Okay, so it's a combination of technical entry point and direction of fundamental sentiment. Okay, everybody, thank you very much for joining. I think you got a lot of potential movement still today on these assets. Just be careful carrying trades through the weekend because you could have some large gapping on some of these indices and commodities as we come out of the weekend on Monday. All right, thank you, everybody. You have a good weekend as well.